So you can see this is a green zone. We might potentially have a spike. So I'm just going to take a buy. I do have, how much do I have? I do have $300 right there. I'm just going to take a buy and quickly put my stop loss below this line, right? And then a buy. Okay. So this is the region where I could see the next spike. One way or the other, going to be caught up. You're not going to be always 100. So you can see there's the spike. Right. Let me try to actually use this indicator to trade Boom 1000. I'm just going to share with you how I use it. So I'm going to do it now in real time. So what I want to check for mostly is the trends. So with the Boom 1000, or just Boom index in general, or the crash in the index in general, you can trade in the direction of the huge candles, or you can trade against the huge candles, right? So if you quickly look at this, I'm on 5 minutes now, on 1 minute, you can see that this actually have a nature of printing tiny candles followed by huge candles, tiny candles followed by huge candles. So you can trade in the direction of these small candles and in the direction of the big candles. And don't be deceived thinking that every time it will give you big candles forever. Because you can see this particular move from where I'm pointing to here, it's almost the same as this move up. So let me just see if I can get my tool. So I know there's probably someone thinking, the bigger moves are always in the direction of the spikes or the huge candles. So you can see from here to there and from here to there. So these small candles collectively almost canceled the entire move. Even if you look at this move from up there all the way down. So you might be caught up in that small candle cycle, right? The creation of those small candles. So what we want to do is to check the trends and to actually decide if you want to trade in the direction of the small candles or in the direction of the big candles. Either one is correct. So right now you can see that we are having an uptrend on 1 minute. I will explain what I'm saying. We are having an uptrend, or rather it's a developing uptrend on 1 minute. After we had these huge spikes, now we are seeing this particular green belt, right? This is exactly where we're most likely to see a concentration of buyers trying to push price all the way up. Think of this as a breakout and a retest. Now, nothing complex. There isn't anything very complex about it. So how would I then use this? So what I can do is change a time frame, come to another time frame here. Let me just try to refresh this chart. Yeah, let's come to this one. So if you look at this, as I've explained, that you might look at this as a breakout. So if you join these two like that, you can see that this big move to the upside broke out of this particular downtrend, right? So what I want to do is to catch an uptrend somewhere on lower time frames, lower than 10 minutes. I'm on 10 minutes right now. I want to catch the next spike, which will be a continuation after this retest, right? So to do that, let me again show you. If you look down here, you can see that on 1 minute, we are having a green, which is indicating an uptrend. On 15 minutes as well, we are having a green, this one as well. As you change time frames, it will rescan and update. But the 5 minutes is showing that there's a downtrend, and that downtrend is nothing but this push towards the uptrend, maybe the 15 minutes uptrend. It's just a retest. This downtrend that you're seeing here is just a retest. So what I want to do is to catch the area where we're most likely to have a spike. So the indicator is just simply helping me to see where we might have spikes. So I'm basically right now trading in the direction of the spikes. So if I come back to M1, so you can see this is a green zone. We might potentially have a spike. Where, if you ask, Where? Because I know there's someone who's going to ask, are we going to have a spike on top of the zone, below the zone, just below this line? Actually is within that particular region. That's where we are expecting a spike. So what I will do, I can take a buy here and hide my stop loss somewhere down there, right? That's what I'm going to do right now, because that's what I said I'm going to do, try to find a trade. So I'm just going to take a buy. I do have, how much do I have? Do I have $300 right there? I'm just going to take a buy and quickly put my stop loss below this line, right? Okay, so let me see, get the parameters there. That's where my stop loss is gonna be. Put there, and then a buy. Okay, there we go. So that stop, it's quite substantial, as you can see. Okay, it's not even huge. We can actually take another trade. It's about $8. It's not that big. Actually, you can just go 5. Don't do it. Don't do 5 if you are trading on a $10 or a bit tiny, because you can see it's $8, right? So it's $8 and $7. So if I do 5 of them, I'll be risking around maybe 30, 40 or so. Remember what I said? This is just showing me where we're most likely to find spikes. But of course, I'm just summarizing this. So if you would like to see me doing maybe a 1 hour video doing a step-by-step guide on this, I can actually do that. So this is the region where I could see the next spike, right? The spike might come and then it starts doing that again, small, 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 and hit the stop. That is why I said that do not underestimate this, because this can last forever. You can get this small spike, right? And then it comes down, creep nicely until it gets to your stop. That's the dangerous part of actually trading the boom as well. You might want to capitalize on these small ones or capitalize on the bigger ones, but there isn't, like, believe it, there isn't one that is the best. Sometimes these small spikes will get you, and they will get you good. They will get you good. Okay, let me, before maybe I take another trade, let me show you. Let's measure the distance of this small move here. All right, with this box, I'm gonna just take this box and move it up there. Can you see that that is almost the same? This move down is almost the same as this big spike. Can you see that? So, and also if you look at the current move down, which is what we're experiencing now, this one, right? This one, né? If you put it somewhere there, if we might get a spike like this and get another series of these candles coming down, we might actually get a mini spike and another series of these candles coming down, right? That is why I'm saying that either one way or the other, gonna be caught up. You're not gonna be always 100. So you can see there's the spike. Unfortunately, we didn't place the other three. Yeah, but that is, sorry, that is the practical example of how or where to locate where the areas where you're most likely to see the spike. As you can see, there's the spike, and then price have gone there. So I believe probably, I don't know, probably maybe $10 we've made from that. Let's just see that. Yeah, $14. There we go, right there, right? So $14 right there. I don't know why my thinking is disappearing. So there we go. That $14. So what I was trying to say again, if we continue with this, let me just minimize this. If we continue with this, you might find that this mini spike that we are seeing, right? The next series of candles is gonna be red candles. We don't know whether it's gonna be a long journey or a long series of red candles. So let me explain that. That's why I'm saying either one is fine. Yes, we got that spike, blah 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 blah, it's fine. But you might find that after, just like this, after this spike, you might find that what comes next is a series of these big candles, right? You might find that from here, from this spike, as much as we caught it, you might find that the next one is just a series of red candles continuing and even going lower than the spike, coming down lower than this, right? So that is why I hid my stop below the green region, because I was willing to follow what? The direction of the spikes, right? So remember, the main point was for me to find a region where I can buy. This indicator is free, guys, simply free. You can download it from the Vindi website, right? It's just free. Don't have to pay anyone. It's for MT5. You can use it on currencies, can use it. Like, I've been meaning to break it down parts by parts, but if you know how to trade, basically, you can easily use this. I'm just following the direction of the trend. So if I'm breaking it down further, because in this case, I chose to trade in the direction of these spikes. But in order to do that, I had to find a region where I can enter, right? If you remember, I said between these two lines, that is where I can enter. I can enter on top there, which would have been here, or enter somewhere in the middle of that green belt, or enter on the lower end. So decided to enter right there when I was still explaining. And as you can see, price there. But again, you might want to exit the trade after the spike and go, right? Depending on your targets, your daily targets and stuff. Because again, this is a warning. The next series of candles might actually be bigger than the spike, right? I showed you an example. Let me zoom in again. Remember what I said? The next series of candles might actually be bigger than the spike. Okay, let me show, let me just, okay, let's show trade levels. Okay. Okay, let me show you what I'm referring to. I've just removed everything, including the indicator. We'll bring it back. The next series of candles might actually be bigger than the spike. So it's nice to trade in the direction of the spike, 50%. It's also nice trading against the spike. I can't say that one is better than the other, because look right here. Let me change this color maybe to yellow so that you can see it nicely. If you look right here, there, that was a spike. But notice what happened after that. Okay, let me just duplicate this. Notice what happened after that. The next series of candles, let me maybe use a different color for this. Let me use this blue. Look, as a spike, the next series was just a whole lot of red candles, which are what? Bigger than the spike. So catching the spikes, yes, it's okay, 50%. Trading against the spikes, again, it's also okay, 50%. It depends on what you want to do. That is the misconception, Yaori. We just want to catch spikes every time. Just want to catch spikes every time. The one thing that I've seen with the boom indices collectively is that if the higher time frame is in the direction of the spike, for example, the higher time frame can see H2 here. There's a very nice pin bar. There's a chance that we might actually go up, right? So I also look at the higher time, what the higher time frame is doing, the higher trend. If the higher trend is saying uptrend, I might decide to actually capitalize on spikes like I did. That is trend following. But it's not every time whereby you're gonna catch those spikes and get away with it. It's not every time. And those who have been trading boom index for quite some time, they will agree with me. It's not every time, because you can get caught up in this whole cycle. All right. And yes, there are spikes there. There are those spikes going up, but they are not as aggressive as the series of small candles that are going against the spikes. The same concept goes for the crash index, right? So that is how I actually look at it. What is the higher time frame saying? Okay. or what is rather my bias. And then I will decide to say, okay, I'm gonna buy this particular asset. I'm willing to buy the boom 1000 index. So in this case, if I'm deciding that, okay, here's an engulfing candle, a bullish engulfing candle, and each one I'm gonna buy after a retrace. Rewind back to this video, right? Just rewind back to the beginning. I spoke about a retracement that took place right here, right? For those who don't like indicators and stuff, that there was a breakout of this particular structure which took place somewhere around here, all right? Or if your trend line is down there, it's exactly where the cursor is. And this was a retracement. So it's either you catch that retracement, a series of those small candles, or you catch a move away, right? A continuation after that retracement. I just hope it makes sense. There's just no other logic that I use to actually trade these things. So a move up, a retracement. If my goal is to go in the direction of the spikes, I'm gonna find an area where I can continue to buy all the way up. I hope it makes sense. Okay. I just hope it makes sense. I just hope it makes sense. Let me know in the comment section if it does, because I don't want it to be, it's not rocket science. I know today's traders like saying, yo, there's something, I have a cheat code. There's no cheat code. I'm just using what I see on the charts. There's no cheat code. There's nothing special. There's no, I have a secret. No, it's not a secret. The spikes, you're gonna catch them. The series of those tiny candles, they're gonna catch you. If you're trading those tiny candles, you're gonna catch them. And then the spikes, they are gonna catch you. It's just 50-50. It's just 50-50. And there might be one in the comment section who says, no, I don't trade spikes. I only trade the tiny candles that comes after spikes. And that's what they're comfortable with. And that's what they're making money with. And there might be another person saying, I only go with spikes. I don't trade the smaller candles. And that's what they're making money with. So we should rather shy away from saying this doesn't work, this works, or whatever. So there's another spike that happened. Let's just go back. There's another spike that just happened. So you can see after that series of small candles, there's another spike that just occurred just now. Can you see that? There's another spike that just occurred. So maybe you're asking, you said you were going to take a trade. Remember, I wanted to add another trade while I was still talking. I was still explaining. Unfortunately, from where we are, I can't add another trade, right? I can't chase. Now I'll be chasing price, because I could have added while I was still talking. I think it was still someone making this small candle right there. Unfortunately, the spike happened. After the spike, I'm not going to say, okay, let me enter again. Now that will be like emotional. I know this is not a lot of money that we're making here, but I'm just trying to give you like a picture of why you shouldn't really chase price like that. So it's very, very important to stick to your rules, right? So how much is that? It's probably $21, right? $20. Let's just quickly look at that. Which is that? Yeah, it's $20 now. I mean, if this account was very tiny, and how much did we actually use? The margin requirement is quite huge. It's 28.45. That's what we've used to take this trade. So again, there's another spike. Can you see that spike that just took place? There's another spike. Let me just close that. There's another spike, a mini spike that just took place. But if you remember correctly, let me load the Vindi indicator again, right? If I load this indicator, you can see it's the same indicator. I'm just changing my templates here. And it's the same indicator. If you remember what I did to get this, to catch this area where spikes are most likely to happen. And again, look at this, the beauty of this. It's a free indicator. I'm giving it to you guys. It's a free indicator. This is where we caught it inside the green belt, right? Price pushed, came back to the top of that green belt, pushed again. It might come back. It might not come back. right? As long as I'm willing to follow this step, those people who are very aggressive, they will have entered again when it came on top. Right? I just don't like staking trades again and again and again because you end up over trading. And that is another downside of actually trading the markets. When you're over trading, you end up making stupid mistakes, you end up breaking your rules as well. That's an engulfing bullish continuation candle right there if you're going looking at that upward direction. So we could see another series of spikes. And notice how now our stop is far. So it might boil down to money management from now. Maybe someone you're trading a very, very tiny account like this one's $300, very tiny again. Very, very tiny. One might decide, let me move my stop to break even. That's also fine. You move your stop loss from here to there, right? It's also fine. One might just decide, oh, I was risking $7, $8. I'm fine with it. I'm just gonna leave this thing to go. Maybe when it gets to, let's say, maybe when it gets to $50, I will just take my $50 and go. I mean, that's almost 1,000 rands if you are in SA. Almost 1,000 rands, right? That's almost 1,000 rands just from that one particular trade. But remember how I got this? I was on 1 minute looking at where spikes are most likely to happen, right? I'm trading the spikes. I'm not trading this small series of small ticks here. I'm not trading that. I could look for such opportunities where I'm looking at this small, going against the spikes, right? And I will show you that particular scenario probably in the next video. Maybe let's pause and we will see what transpires after a couple of minutes or whatever, right? So the fact that I've showed you how to catch this, I'm gonna let this trade to unfold so that you can also see the other side of it, the other part where these spikes might come back and hit this. Because if we were just saying it in theory, I don't think people gets to see it. One might say, but you left money on the you should have moved your stop to break even. This we might get these candles might come down, creep until they hit our stop loss down there, right? So it depends on what you do after. Yeah, we didn't even have a target. Yes, this is more than we've already done more than 1 is to 2 there. That is 2 times. The profit that we have running now is 2 times what we're risking. So maybe we could scale out, but I want you guys to see that these small candles shouldn't be underestimated. They might actually come back down, creep nicely. They might take their time, until they get past here, until they hit this thing down there. Maybe we'll check it after some time. If it doesn't, maybe we'll close it at a much higher profit, or we'll just take that loss as a what? A lesson to show you that this can also take you out. You shouldn't underestimate that. I hope it makes sense. In summary, I hope you've seen how I got this particular trade in. All right? Yeah. See you just now. Okay, I'll see you just now. Don't just log out. Maybe a few moments later. Unfortunately, after a minute or so, another spike actually took place. As you can see, now we are a bit far from our entry, and you can see I'm on 5 minutes now. We are seeing that we have made what? Maybe 5 times what we're risking. Let's see how much we have. We actually have made $52, and we can just take that $52 and beg it, right? Remember how much we were risking on this one? It was about $8 somewhere there, $8, and we've made $52. So what can we do? Close this trade entirely. We managed to catch the spikes. So next time, what we're gonna do is to try and trade in the other direction. Let me know if you will be interested in that. Maybe just in a form of a recap, let me show you what I actually did. This is another picture of it on 15 minutes. You can see we are trading the green belt. So the green belt is the one that is what having bias. So since I decided to trade in the direction of the spikes, right, I was looking for a lower time frame area where I can find the green belt. Just reverse that video, right? Or this particular video to see that. So this is where we entered while price was still here, because there was this nice green belt, right? Again, look at this. The other green belt just formed on top of this. However, and this is what I have to say. However, guys, now look how far, because of the magnitude of this spike, right? Now look how far the green belt is, right? Price, it will take some deep retracement for price to get here. Remember, these are dynamic. They move with price, right? They move, but they're not the very, very, very fast. They're almost as medium, right? But they react to price. So right now, I wouldn't be looking for another buy where price is. I wouldn't be. Maybe another person is thinking, had he opened with that 5 lot that they said they was going to open, he would have closed the $250. Are you thinking that? Unfortunately, it didn't happen. That is where now the greed part does not drive me. If I missed out on an opportunity, it's gone, it's gone. Another one will come in. Don't be too hard on yourself, right? Because remember, when after placing that first trade, we wanted to place another one with the 5 lots, because we could see that the risk was a bit reasonable. We're risking about $8, right? So if we had that, we would have probably made 250 or so. But where we're gonna be able to hold it until, because you must also be comfortable with what you're risking. Because if you increase the risk, you might find that now you are increasing the fear as well. The fear of doing what? The fear of holding. So just make sure that whatever that you are risking will be able to control your patience a bit, right? So yeah, it's far. But if we have a series of those small, I might consider taking another buy there. So all the way to catch the spikes. This is the boom. With the crash, it will be the opposite. With the crash index, it will be the opposite. Let's drag it to the chart. Let's take the crash 1000. With the crash index, it will be the opposite of what we're doing right here. Okay, because here we're getting spikes to in the downward direction. Okay, so what we need, we might want to see a red area where the sellers are, and this thing is pretty much green, meaning those tiny candles are heavy. You can see M15, M20, M. It's not actually going down like that. It's not actually going down like that. It's actually booming. Believe it or not, it's in an uptrend and it's supposed to crash down. We're talking about the current. I'm not looking at this. I'm talking about the current. It's in an uptrend and it's supposed to crash, right? But if you come down to about 5 minutes down there, right, you can see it crashed, but there's no that red area that we're looking for. So if we want to catch those on 5 minutes, there is one for me. Can you see? On 5 minutes, here's one. You can see here, this particular tool down is guiding us. It's part of the indicator. Download it down in the comment section. The first pinned comment or the description box, somewhere there you find it. Right? It's a free indicator. There's no need for you to worry. So you can see, choose. Are you trading the direction of the spikes? If yes, then look for things that are, or time frames that are coinciding or aligning with your direction. Because here, if you're saying, I want to do the reds, let me simplify. I want to go in the direction of the red. Here's a red area where we're most likely to find the crash, right? But again, don't just say that I'm going to take the crash, share the overall trend. M15, it's green. M20 green, M30 H1. You can see now my decision to sell this will be just weird, because the other time frames are not saying the same thing. Hey, let me show you with the boom 1000, because maybe now you're confused. So with the boom, right? Remember I was saying I'm gonna buy this. Let me again load the indicator. Right? With the boom, I said, I'm going to buy this thing. But I need the supporting what? They will say submitted supporting documents. I needed supporting something. Reasons as to why I'm doing it. Because I can't be driven by emotions. I'm saying I'm gonna buy. But what's the overall direction? Look at how green everything is. Can you see? So it makes sense that following those spikes, it's being supported in different time frames. If I come to H1, you can see there's a green belt. That is a nice uptrend. If I come to H2, there's one there. Continue to H4, there's one, even though it's far, but it's supporting. So I needed the one that is closer. Which one did we use for that trade? We used this one right here, because at that time we were here. Make sense? So if we're to take another position, the closest one will be this, right? Between these two regions, this is where we might expect a buy and either stop somewhere below this blue line, right? Because why are we hiding? One might say, why are we hiding on stop far? Look at that. It boomed again. You can see. Because all the trades, right? Hey, I know there's someone saying, he shouldn't have closed that trade premature. Hey, fun. We are not trading in hindsight. We took that $50 for risking $8. It's almost 1,000 rands. What can I buy with it? Oh, you can buy electricity here and there in the village. You can buy electricity. It's almost 1,000 rands. How long did it take for us to make that 1,000 rands? You were here. You were sitting here watching the video. It didn't even take what? Did it take an hour? It didn't take an hour, because we started somewhere there and we're on 1 minute. So it took a couple of minutes. But our buys were supported by this, guys. It's heavily in an uptrend, this whole thing. Right? Let me know if this was helpful, or maybe I was just talking nonsense. Don't be scared. You can say, Vin, you're talking nonsense. Yeah. I hope you guys are aware. Otherwise, sharp.